So you've probably heard this 1,000 times. Just trade the trend. The trend is your friend. But if it was really that easy, wouldn't all traders already be rich? Just spotting the trend and jumping in is not the whole story. There's a lot more going on than that. And by the end of this video, you're going to understand the exact concepts that led to the largest trade of my career. So stick around for that. So let's start simple. I'm going to break down what a trend actually is and why it matters so much which time frame you're looking at it on. Then I'll get into the part that most people get wrong. A lot of you watching me trade mean reversion think that I'm always trading against the trend, but that's only true about half of the time. A lot of what looks like a short-term mean reversion trade is really me buying a dip on something that's going to trade way higher, or vice versa if I'm shorting. Now keep that in mind because it's going to make sense as we move along. So to break it down simply, an uptrend is simply higher lows and higher highs, and a downtrend just means lower highs and lower lows. That's really all it is. Here's the part that changes everything though. Once you can actually tell what time frame the trend is occurring on, you open up a few different ways to take advantage of the exact same move. And here's what I mean by that. I usually take an entry when price gets stretched too far from the mean on the smaller time frame. I grab some profit early as it retraces, and then I hold on to a piece in case the trend actually does reverse. But you could also just trade that break a trend all on its own. On the small time frame, that may look like a trend break, but zoom out a time frame or two, and that break is actually just a normal pullback occurring on a larger time frame trend. So when you learn how to take advantage of both sides of a trend, that can open up a whole new world in your trading. So once you can actually tell what's trending and on which time frame, that's where this really gets interesting. So most tools and indicators that tell you a trend actually exists are almost always late. And that's the problem with something like the simple moving average. It's literally just an average of past prices. So by nature, it's always lagging behind what's actually happening right now. By the time it confirms a trend, a huge chunk of the move has already happened without you. So let me be straight here though. When I'm trading exhaustion, I am actually trading against the trend, but on a smaller time frame. And that's just what it is. But I'm not doing so blindly. I always am aware of where the bigger trend is. So why does this matter? For a couple reasons. First, it tells me where I should be looking to take some of my profits. Most of the time, my target is simple. I'm just aiming to get back to the larger trend, not to fight it forever. But it also, and more importantly, tells me whether the trade is even worth taking in the first place. So if the price is too close to that larger trend already, there's not enough room in the trade to justify the risk. And I'm not going to take it and just hope that it rolls in my favor. I need enough distance from that trend to actually have it make sense from an RR perspective. And once in a while, if price keeps going and the trend actually flips, I'll hold on to a piece of that trade instead of closing it all down. And that'll make more sense by the end of the video. So even on a counter trend scalp, the bigger trend is still running the show. It decides whether I even take the trade, where I enter, my profit targets, and whether or not I hold for more. So now how do I actually spot these? Both the counter trend scalps and the times I want to buy a dip on the bigger trend. This is my system that I use for both. I call it exhaustion mean theory, or EMT for short. And just for the sake of time, I'm going to keep it simple. It's essentially a mean reversion strategy. So when price moves too far too fast, it almost always has to snap back and retrace before it does anything else. Now that's an oversimplified version of this concept, but it gives you an idea of what I'm looking for in my trading. But now here's why my strategy is so useful in real life. You don't need to sit and stare at the charts all day. You just need to know your levels, set an alert, and wait for the trade to come to you. And with chart trading nowadays, you can set your entry, your stops, and your profit targets all ahead of time. So the trade basically runs itself once price gets to your level. You can even check these trades on your phone, confirm it, and then go about what you have to do with your day. And if you've got a full-time job, this is huge. Because trying to catch a trend in real time means you might be sitting there staring at screens all day waiting for an entry that may never come. So if you want to know how I actually identify these levels using EMT, check out my pre-trade checklist. It's going to be in the description. So remember what I said from the start. My biggest trade ever came from this exact concept. Using EMT on a larger time frame, I was able to identify exhaustion on a stock that had dropped hard. And I grabbed a large part of the move as it retraced. It was a bit of a swing trade as opposed to a day trade, but it was still my largest trade to date at about 30K. And it's not because I was trying to predict the trend, but because I knew how to spot exhaustion when I saw it. So that's literally the whole point of this video. Sure, the trend is your friend, but only if you know your time frame, and only if you can tell the difference between a real reversal and a harsh dip on a trend that's still going strong. So if you want to see how I spot these live, that's what I'm building out in my free Discord. So feel free to check that out below. So I hope I started to break these concepts down in a way that you can understand. But if not, feel free to drop any questions in the comments. So thank you for watching, and I'll see you in the next one.